Morning, guys. Happy Halloween. It's October 31st, 5:26 a.m. Central Time. Brian Split is back with his mustache. Brian, congratulations on the stash.
Yeah, thanks, Joe. I deserve it.
Yeah, I think you do too. You look much better. So Mackenzie, we taped yesterday, and then really the big news came out after we taped. So let's start off with the big China soybean news.
So, China has agreed to long term U.S. soybean purchases. Under the trade truce negotiated by President Trump and Xi Jinping, China will buy at least 12 million metric tons of soybeans between now and January, and a minimum of 25 million metric tons annually for the next 3 years. China also plans to remove tariffs on most U.S. agricultural products. While the commitments mark progress, they fall short of historical norms, as U.S. soybean exports to China have averaged about 29 million metric tons annually over the past 5 years. Soybean futures rallied on the news yesterday, with the January 26 contract gaining roughly 13 cents to close near 11.08 per bushel.
So this news all came from Scott Bessent. Let's listen to Scott Bessent. We'll get the news straight from the horse's mouth, and then we will.
Yeah, one of the big parts of this agreement, and I'm going to break the news here on your story, is the massive amount of agriculture purchases that the Chinese are going to be doing in this agreement. So the Chinese have agreed to buy 12 million metric tons of soybeans during this season, right now, between now and the should be January. And then for the next 3 years, they're going to be buying a minimum of 25 million metric tons per annum for the next 3 years. What I would expect is, as President Trump did in 2020, after President Xi had agreed to the phase one deal, he called him regularly and got him to buy more, and that number went up much higher.
All right, Brian, 12 million metric tons is 440 million bushels that China is going to buy supposedly in the next 2 or 3 months. You taking the over or under on that?
I think it's reasonable if you really look at the amount of what we understand, and this is our commercial guys over at John Stewart and Associates, what we understand as far as China's coverage. They have obviously October needs booked. We're at the end of the month. November, we had them at 95%. But their December coverage was only about 25% and then 0% for January. So I think that's the kind of the gut slot that they're looking at, filling coverage for that period. Then they do start to have some more coverage as you get into March, which is when we're going to have the Brazilian crop online. So I think that, yes, it's extremely reasonable. So basically, if you think about China, they're importing maybe about 11-ish million tons a month. And they've been doing that from primarily Brazil and then some recently from Argentina. But that just gives us maybe half of what their imports would be per month for about a 2-month time frame. Right. I do think that's very reasonable and achievable in the short term. And then it's okay. Now we've got the 25 million tons moving forward a year after that. And again, it is back to almost business as usual. So it's a commitment to buy almost as much as they've typically been buying anyway, year to year. So I don't know. I mean, it's not something I get super excited about. It feels like there was a problem that was then created, and then we solved the problem and then got back to where we almost were before we made the problem, is the way it looks to me. But
it does kind of feel that way. Although in the case of the market, I suppose you'd have to argue that, hey, we were looking at a situation where maybe China buys nothing. And now all of a sudden, hey, we're back to maybe normal-ish type volumes. And you also take into consideration the fact that we're crushing a lot more soybeans, the fact that Brazil is, growing a lot more. And it starts to feel a little bit better, doesn't it?
It does. I mean, it's definitely, if you were in the comment section of your videos over the last several weeks, Joe, you would read opinions where China was never going to buy another U.S. soybean ever again. So the hyperbole there, was just getting a little bit out of hand. But yeah, this is much better than what the market was really anticipating just several weeks ago. Now, I guess one of the things I would mention is that the soybean market rallied about, exactly $1. We had a low a little over 2 weeks ago. It was right around October 14th of 10.01, and then we made a high of 11.01 on November. That's $1 rally in about 2 weeks, and you cannot tell me that China was not already part of that rally. They've already been in here. We've talked about evidence on this show a couple of weeks ago about how the spreads were moving, what was going on with basis in certain areas that led us to believe that China was already in accumulating some of those purchases. So I do think some of that 12 million tons and more than what they were saying yesterday, a few boatloads, 180,000 tons, more than that has been already bought by China would be my assessment.
Let's go to what Brooke Rollins said. So not only are soybeans included here, she talked about sorghum. She talked about unwanted tariffs on most U.S. ag products like soybeans, cotton, sorghum, corn, wheat, chicken, dairy, pork, beef, fruits and vegetables all being removed. So, I mean, this appears to be good news. The one thing that I will note, and to go to the comment section, this is what the commenters will say. Hey, China hasn't confirmed this. We haven't heard China say this. And what China did do is they confirmed that they agreed to ag purchases, but they didn't throw the numbers out like Scott Bessent did. So maybe that's the one criticism or thing that we need to consider right now. But I don't know. But the market, Brian, is taking it. They're taking Bessent at his word.
Absolutely. And there was quite a bit of volatility yesterday, Joe. I think there was some maybe miscommunication or misunderstanding of what was agreed to. And so there was quite a bit of volatility, not last night, but 2 nights ago, where the market had broke substantially. And then we rallied 40 cents off those lows as soon as Bessent started talking about these actual volumes. But the spreads, we had nearby November, briefly trade inverted over next year's November. We talked about, November versus Jan earlier in the month. Now we've got your January versus March. They're taking carry out of the market. This is one of the things that happens when you see very strong demand. And this is something that is used to entice the producer to let bushels go because now they're taking away the incentive to store them.
So you've got futures rallying, you've got spreads rallying. Basis has improved. I pulled the cash bid sheet from North Dakota yesterday, and basis in North Dakota had been notoriously horrible, and it's still horrible, but it's improved a lot. Like some areas improved from, hey, we were $1.80 under to now we're $1.20 under. And there were some isolated reports of stuff even better than that. So you've got everything kind of working in tandem here. The board's rallying, spreads are rallying, basis improving. How important is it that we close above this 1081-ish neighborhood on the weekly continuation chart this week?
Well, I think above 1081 is important, and it looks like it's closing into new highs for the year. There's absolutely nothing bad about that. I have this drawn a little bit different than you, Joe. I have kind of a line from that high in August to the high that was made early in the year in February, and then again it hits that line that we had here in August of this year. And so we kind of go peak to peak to peak, and this is where roughly up at $11 that line comes in. One thing that we've talked about over the years is the importance of $11 on a front month basis. And so I kind of went back and looked at like the behavior of getting through $11. And interestingly, you have 5 events over the last 25 years. We've gone from sub 11 to above 11. 2 of those events were very short-lived, where we went basically up to 12 or just above 12 and then right back down again. The other 3 events, we went through 11 up to 12 and then continued going for the next several months. Now, whether we talk about the big rally or even those short-term moves, the one thing, there's 2 things I can say that is consistent in all 5 of those events. Number one is that when the month that we blow through $11, so we're not doing that right now. The month ends today. The month that we blow through $11, we see $12 the same month. That's happened in all 5 occurrences. The other thing that's happened is every time we have blown through $11 to the upside, the monthly low in the month that started that rally has come from 1042 twice. It's come from 1068 and a half once. It's come from 1067, and it's come from 1047. So interestingly, you have 3 years where you've blown through $11 to the upside, where the low for the month that we took out 11 and closed above 11 and went to 12 started in the 1040s. 2 of the other months, or 2 of the other years, it started in the 1060s. Now, interestingly, if you look at where November has a gap to fill, it's about 43 and a half, and January's got a gap to fill at about 63. So this might depend. I think we will go down and fill gaps. It's, do we do it before or after the November contract expires? That would get us down into those 1040 to 1060 zones. And then hopefully by the end of November, we're up at $12 or higher.
And $12, of course, would get the farmer back to break even for the most part, which I guess would be a victory. Let's go to the farmer reaction or the Soybean Association reaction.
So the American Soybean Association welcomed the newly announced U.S.-China trade truce, praising President Trump for prioritizing farmers in the negotiations. After months of stalled purchases and uncertainty, the agreement offers much-needed relief for U.S. farmers. While China's purchase commitments fall short of average recent volumes, the ASA expressed optimism that soybean buying will expand in the years ahead. The association also emphasized that the deal supports long-term stability for U.S. farmers, along with increased opportunities.
I'm not here. I don't think we're here to tell farmers how they're supposed to feel about this, but I had a lot of different types of comments come in yesterday, Brian. A whole bunch of people were like, Trump kind of caused a problem and then he fixed it, and now he's claiming victory. And other people are just saying this is a big win for farmers, and Trump's the man, and he's doing what he said he was going to do. But I think generally speaking, I mean, just tangibly, the market's improved, hopefully improves back to break even levels, and farmers can kind of go on living without having to worry about this whole thing.
Yeah, right. I mean, I think more importantly than this year's crop and trying to get back to break even or profitability for the crop that was harvested this fall is then the idea moving forward that hopefully next year's beans and the bean crop after that and the bean crop after that can see profitable levels, because that's really been the concern. I mean, you run the numbers for planting soybeans next year and it just doesn't look good. So we do need to see the market to go up to give us profitability, not only for this year, but years ahead.
If China buys 25 million metric tons a year for the next 3 years, I think that's probably above what they would buy trade deal or no trade deal. Like if this was just a normal non-trade war environment. I mean, Brazil keeps expanding at probably a greater pace than Chinese demand is going to expand. Like I would think 25 for the next 3 years would be a victory.
Yeah. So I think the most important part of this, Joe, is that if that agreement is held to, this is Trump basically securing a certain amount of business from China, regardless of how large Brazil's crop gets in the next several years, right? We were 154 million tons of Brazil soybeans, not this past harvest, but the harvest before. Then it was 169 million tons this most recent harvest last winter, or our winter. Now we're projected to see Brazil grow 175 million tons. So the growth of Brazil's production is something that is a concern for U.S. soybean producers, big picture. So at least for the next several years, this does give us that idea that China will buy. And then think about what that means, Joe. So 12 million tons just in the short term, plus another 25 million tons. That's 37 million tons of beans in roughly the next 14 months. If China does buy that amount in that period of time, we will go higher.
Here's one of the big questions. Is China going to buy U.S. soybeans if they're not competitive? U.S. soybeans are competitive versus Brazil right now. When, and it's inevitable, when we get to a point, U.S. soybeans are not competitive versus Brazil, is China going to buy U.S. soybeans?
Well, they'll buy Brazil soybeans at that point, and then we will be competitive again next late summer into fall, and then they will likely buy U.S. soybeans again. And there's reasons seasonally why Brazil is more competitive than the U.S., and then the U.S. becomes more competitive. It has a lot to do, again, with timing of our harvest versus their harvest, and size of our crop domestically versus size of their crop, and internal domestic demand. So I think there's a natural ebb and flow to when we're cheap versus when they're cheap. And China will buy Brazil beans still, and they will buy their beans when they're cheaper, but they will buy beans likely in the period late summer through fall when they generally would, and they will stack up their purchases in that period, would be my thought.
We do have some prior evidence of what happens in this sort of thing. China did buy a lot of U.S. soybeans following the Phase 1 trade deal, which was signed in 2020. They didn't, however, hit their long-term commitments. So there's no guarantee here that China is going to do anything over the next 3 years. I think they'll do something. I don't know that the 25 million is like a guarantee, because your previous example of this would say that it's not really a guarantee.
Yeah, and the time frame of this is basically, hey, we're going to appease you as long as you're in office, and then after your term ends, this is a 3-year deal. So, what will it look like after that? There was no enforcement of the previous trade deal in the previous administration, and so again, this is maybe something that's a short-term victory, but this will be an ongoing battle, and China has obviously invested a lot of capital in Brazil over
Yep.
the last couple of decades, and they do have the intention of, again, being more self-sufficient, not having to rely on the U.S. as much as they have in past years. But again, at least for the short term, this is a good short-term victory here for us.
All right. Corn and wheat futures also traded yesterday.
They sure did. Corn futures settled lower on Thursday amid disappointment that the new U.S.-China trade truce lacked a defined framework for U.S. corn purchases. Additional weakness stemmed from uncertainty surrounding the size of this year's crop, as the USDA has halted crop progress reports due to the ongoing government shutdown. The December 25 contract declined nearly 4 cents, settling around $4.30 per bushel. Wheat futures also softened, with the December Chicago contract falling 8 cents to close near $5.24 per bushel.
How important is it, Brian, that we clear this calendar year trend line on the December corn chart?
It's just the next step here, and just above yesterday's high is also the 200-day moving average. But this is one of those things. I know everybody would like to see all of the different resistance things taken out all at once, but it's a 2-step forward, 1 step back type of a deal. I think we just need to, in the short term, after hitting the 200-day and testing this downtrend, I'd like to see us really, if we do need to pull back a little bit, hold the 424-ish area. I think it's fine to pull back a little bit. It's healthy to pull back a little bit and then make another surge higher. We don't necessarily want to see this thing just go straight up. We want to see a healthy trend develop. But big picture, closing through that downtrend, we've already talked about the head and shoulder. We've seen some price action above that, the neckline of that. I would really then fast forward to the March contract. The March contract has the downtrend, the 200-day, and the neckline kind of all in the same spot. So above 450 March, I think, would, to me, be the confirmation that this thing wants to go to, let's say, 485 March. But I don't think it's necessarily a bad thing that there wasn't any specifics about corn. It's just all the attention from the media has been about soybeans.
Right.
Every news story, every interview, it's all been about soybeans. So I think that's why the focus of this particular meeting was soybeans. But the fact that we're going to reduce the tariffs on other agricultural products, I think, is going to be good in the big picture, and that business will come down the road.
The media attention to soybeans was crazy, especially like 2 or 3 weeks ago. It's like every major media outlet had a soybean story. And I looked at it at the time. I think I mentioned this on the podcast. I was like, are we really going to drop $1 in beans after every major media outlet is telling you to be bearish beans? It just, it felt odd to me at the time. Of course, now we rallied. Let's look at wheat real quick. So you were unable on SRW wheat and also HRW wheat to break out above these September highs. Is that a problem for you?
Not a problem. It's expected. Going up and revisiting that resistance. We did have a little bit of a reversal day off of there. We've got a gap below the market. I would actually like to see wheat, and this is the DEES SRW. I would like to see this contract back down to about 512. Then it would make a very nice right shoulder on wheat, similar to what we've been talking about on corn. So there was a low that was made in early September, mid-September at 512. That low then led to that push to 535 3/4. So going back down to that low would then give you that right shoulder. And then I think from there, you're looking at a little over 40 cents from the 535 area. So I could see this thing getting to maybe the 580-ish area. So we're kind of talking like 480 March corn. Maybe you're talking 580-ish on the December wheat with some carry in the March. You're probably talking 590, close to $6 March wheat. I think that's where we're going to go eventually. And this is just one of those things where we need to build the base of support below the market, get another running start at that 535 area. But I do think that's something that's going to come to fruition.
All right, we've got some kind of secondary news out of the trade truce.
So the U.S. and China have agreed to suspend ship-related fees. The 12-month pause will remove an estimated $3.2 billion in annual fees previously imposed on large Chinese-built vessels docking at U.S. ports. Washington implemented the fees earlier this month to curb China's dominance in global shipping and support domestic shipbuilding. And in response, of course, Beijing implemented its own fees on U.S. vessels. The measures had begun to drive up shipping costs and disrupt vessel schedules, with expectations that they would eventually also impact consumer prices.
I guess this had to happen if you're going to have a trade deal or truce or whatever that involves a bunch of purchases. So I guess this just kind of goes along with it. I don't have much else to say about it. Do you?
No, it's hand in hand. I mean, why are you going to start doing all this trade and keep all these fees in place? It's extremely inefficient. So it just makes sense that this is part of the overall package.
Yep.
So we have the drought monitor, and drought conditions held mostly steady across the Corn Belt over the last week. Rainfall in portions of Kentucky, Ohio, and Michigan supported modest relief, while continued dry weather contributed to worsening conditions in Iowa and Illinois. The High Plains remains the region least impacted by drought. Over the last week, drought intensified slightly in eastern South Dakota, while southeastern Kansas and central Oklahoma saw improvements. When we look at the percentage of U.S. areas experiencing drought, corn country 30%, soybeans 34%, winter wheat 40%, spring wheat 18%, and cattle country 26%.
We've had some rain over the last couple of weeks, and the river levels have improved, and this is very good news. Now, maybe we drop again after the first week in November, but this is kind of additionally, I think, good news, Brian. When you throw the trade deal and throw this in, throw basis levels improves, there's a lot of good things happening here, it feels like.
Yeah, this is positive. I mean, that would be one of the things that we would not need is, hey, we're going to start exporting all this product to China, and then all of a sudden river levels are too low, and we just can't get enough product on each of these vessels, and it becomes, hey, now we need more vessels to move the same amount of product. So having the river levels back to adequate levels, definitely a plus. Just makes the job easier to get everything out. One thing I think is also interesting is too, you were kind of looking at those basis levels for North Dakota. There's a lot of business out of the PNW that was already lined up for corn. So it'd be interesting to see if, the PNW now needs to kind of reshape some of the way that business looks and make some more room for some soybean business out of the PNW. That would be something, again, that would help out that North Dakota producer tremendously.
Mackenzie, quick cattle update from yesterday.
Cattle futures were mostly higher yesterday. Live cattle were 7 cents lower to 387 higher, and feeders were 25 cents lower to 152 higher.
Brian, quick cattle market thoughts.
We went and limit down several times in a short period of time. I think the market got overdone, but we do look to have a major monthly reversal here to the downside on a continuous chart. I think that does suggest that we did see a major high in the month of October. That high might be here for quite some time, and it to me suggests that we'll get rallies, and this isn't going to be a straight down market, but this is now a sell the rally market, in my opinion.
Outside market's fairly quiet this morning. Guys, have a wonderful weekend. Happy Halloween. Brian, thanks for joining us. We'll be back on Monday.